was just a question about whether we looked at the sort of slightly slower time frame, and we're looking at taking trades on the faster time frames, but on MT4. I haven't got MT4 up, I've got MT5, but I've put up the time frames that are available on MT5. And in fact, the dollar CAD has had a really nice move lower. In fact, if we look at the daily chart for the dollar CAD, it's, as you can see here, up until a few days ago, it has been trading, trying to break away around the volume point of control, which sits at 135.73. Now, these are daily candles. Some of them are quite wide range. That doesn't mean to say that, you know, there wouldn't have been trading opportunities in there. This candle here is quite interesting because we have to remember in the forex market, this is a 24-hour candle, but we're really talking 3 separate sessions. And in fact, it's a point I made on the forex page at Facebook, and that is you have to treat each session, that's session crossover, that's when a new financial center opens, like New York or London or Europe, or now New York will be it'll be closing, and we'll be starting with Asia again. Although Japan is on this bank holiday in Japan, so it'll just be Australia and New Zealand and the other Asia Pac countries other than Japan. That candle there, it's a great candle, but it represents 3 very distinct sessions, and often you can get a trade in one direction, maybe if you're in London and Europe, and then you will get a complete reversal coming up to New York. You really, you know, you just have to play it as you see it. Obviously days, you know, narrower days, say that one, that's going to be much more tricky. But when you look at the daily chart, what the instrument is doing will kind of tell you what kind of, you know, day you could expect depending on where you get in. Now this day here, which is an absolutely horrible day, it sat on the VPOC, very narrow range. You know, goodness gracious, you would think, no, this isn't going anywhere. A lot of chop, as I said, very narrow range, stuck probably around the VPOC on all time frames, and, you know, waiting to break out. Well, we've had a breakdown on the daily chart, and we've actually had some very nice moves today, also being the 4th day. Primarily because of dollar weakness. Everyone's been looking at the dollar index. The dollar index is at a significant low, and obviously David's looking at oil prices. Oil prices are fairly sort of buoyant, given, you know, the state that they got themselves into a few months ago. So that's always going to help the Canadian dollar. So that's the daily chart. But to look at a specific trading opportunity on a faster time frames, using levels, using candles, using the volume point of control, and this actually popped up. This is the 5-minute chart of the dollar CAD. On this particular chart, all I have are the Camarilla levels. These are the key levels, the intraday levels for the dollar CAD. The key to Camarilla is the 4th level, either S4 or R4. What tends to happen is a price will come down to the S4. It will then, as it does here, try to break through, generally kind of consolidates. If it doesn't break lower, it will pretty often reverse away from it. As you can see, we've had this consolidation. We do have the advantage of the CSI as well, so we know the dollar is, you know, is pretty beaten down, and it wants to fall lower. But we did actually finally get a break from the S4 at about, it was the price here, about 33.68. So that's the time chart. How that represented itself on the time chart with the volume point of control, we've got it here at 33.87, slightly lower than we have on the S4. But all this sort of sideways is what we're seeing on around the S4 on that particular chart. But the piece of the move lower, what I want to show is actually on the renko. When I said earlier, you have to find your combination of time frames, well, I know renko isn't time, strictly speaking, because it doesn't look at time. It looks at the number of one of these little bricks only posts, depending on the number of pips going through the market. This one is actually set. This uses the ATR version the indicator. So it's actually it's set at 2.81. You can give it a fixed value. You could set it at 1 pip, 1.5, 2, 2.5. But the indicator has taken, you know, the reading of the dollar CAD and said, you know, each brick is going to complete at after 2.81 pips have gone through. So let's look at that level again. Where was the S4? S4 is at 33.68. So let's go and have a look and see where 33.68 equates to down here, and it's probably 33. It's about down here. It's about this. That's it. It's about this level here. But in fact, you could have got in very, very slightly higher, because when you look at the renko, this was actually the fall lower. Then we had the pullback. Then we had a change of color on the trend monitor. And the beauty about using the renko with what you see on the time charts is the renko actually puts the price action into context, in as much that it takes all the noise out of the price action. So you get very clear trends, if you like. You get the congestion phases, and you get the breaks, you get the pullbacks. And what it also does is, if you missed this potential entry way back here, when you had the trend dots bright red and you also had the trend monitor bright red, you've missed all that, and you say, okay, then it pulled back, and then you had this congestion phase, which is around, as I said, around the S4. You then can use it as a re-entry. A more aggressive entry is as soon as it barely sort of clears, if you like, the support line that we have here, this low of these two bricks here. Or you can be a little bit more conservative, look at the time charts and take your entry, and that would be your move lower. Now, what's happened is, on the time chart, we have had some efforts to rise. This is on the 5-minute charts. We can see efforts to rise here, because we've got, you know, wicks to the bottom of these candles. This, you know, every time you get a wick to the bottom of the candle in a downtrend, there is some buying coming in, you know, as the pair is attempting to move higher. And we can see here these little candles sitting on this support at 33.52. This is the price-based support, this little hatch line here, but it's also on volume support at 33.50, a nice round number. So it looks like it wants to turn up higher. What the renko does, it will start to pick up this sort of, you know, faint stirrings of a reversal higher. But it will also help to keep you in, because this could just be a little minor pullback, as we saw here. And you can, you know, you will just have to wait until, is that going to go into some congestion, or are we going to get a V shape? You tend to find it goes into congestion rather than a straight V shape. It does happen. I'm not saying it happened on the pound Aussie yesterday, which was quite, in fact, it's a point I made. It's quite unusual. But the renko, the beauty of the renko, it helps you to get in. You can decide whether you want to be a bit more aggressive up here. You could wait until it's actually cleared the low over here and come in here, which is 33.74. We looked at the 33.68, which was where the VPOC was. It's entirely up to you. You are the only person who knows what kind of what kind of trader you are, in the sense of, do you like to get in, you're prepared to take a little bit more risk for that little bit extra reward, or do you want to be a little bit more conservative? Now, it looks like we are getting a reversal. So if you're a scalper, are you waiting and say, right, am I now going to go the other way? Well, you're going to have, if you're a scalper, you're going to have to do the fastest time frame you've got on the MT4 is actually the minute chart. So you would go down to the minute chart, look at the candles, look at the volume coming in. Is that, you know, is there something in here that you like to see? Is there, in fact, we go over here, we've got a kind of the 2-bar reversal here. We kind of start of the trend monitor sort of flashed blue, the trend dots are still red. They then start changing. The trend dots are the closest the indicator that's closest to the price action. And what's also interesting about the trend dot is you need to see where it will move as the price action is developing. So you can see here, where you have a you can have a blue candle and it can be at the top. You can have a red candle and it can be at the bottom, which is good. So you've got this, you've got a 2-bar reversal, you've got the dot at the bottom, and so it moves higher. But it changes before the trend monitor does. But it holds, it holds, it holds, it holds. Even here, it holds. You've got buying under this candle. Again, it blue, blue, blue. It goes up and up and up. So that is a much more aggressive, from here, it's a much more aggressive entry. You've also got the volume point of control, so it's coming off the VPOC as well. Got decent volume under these 2 candles, not a lot of volume under these 3 pullback candles here. Nice volume under here. You've got a wick to the bottom of this candle, so there's obviously some buying under here as well. You're also coming up to a low volume node up here, so if it can push through, it should go through fairly quickly because it's a low volume node. But it's a fast chart, and you look at your renko, that's beginning to turn. The trend dots change first. They've gone to grey. As I said, it all depends on you and how much time you want to spend in the trade. If it's literally minutes, fine, go for it. But you've got to check the spread. You've got to check that there's going to be enough in it for you. But by looking at multiple time frames, looking at a time frame that isn't a time, which is the renko chart, and also being aware that obviously we've had a big down day on dollar CAD, and what you're trying to take is some pips in this tiny little wick to the bottom of this candle. That may be your thing. That maybe is how you like to trade, and where is it wanting to go, you know, because the other assessment you have to make on a trade is where do you think this price is likely to go in terms of support and resistance. Well, going back to the levels that we've used the Camarilla, we've got the volume levels as well. Well, the obvious target, if you like, is 33.68, which is where it broke away from in the first place. But we are coming to what is usually a quieter time, certainly in the spot forex market. Moves do happen, but things do tend to sort of calm down at this time. And we've got levels here. What's this one? 33.61. These are generated automatically, purely based on price. The ones in the shade here, these ones here, these are based on volume derived from the volume point of control. And as I said, if we got to through the volume, if it approached the low volume node, it would go through there reasonably quickly, which looks like it's doing at the moment. So that was for, I can't remember the person's name, but I wanted to see how you would look at scalping on an MT4. I know I've used MT5, but I'm using the time frames that are available on MT4. Right, that's all we've got for you today, very quickly, because I know you've got some new people with us. Let me have a look. Where am I? Have a look. That's my site. No, I'll just do it. Is that all right? Right. Could help if I could spell my own name. There we are. Right, this is this is where you find all the analysis that David mentioned earlier. That was on the Dow Jones. We've got gold, we've got silver. There's all sorts of bits and pieces on there. This is where that you'll also find recordings of the webinars, the sessions. We actually chop them up into smaller, shorter videos, but they're also on my YouTube channel. It also pulls up the stuff that I put on Facebook, on the Forex trading page, and on my personal page. With regard to the education program that I mentioned, the Forex education program, you can find the details here at quantum trading education. We are going to do a little video actually, which will give you a peek inside the program. I mean, you can obviously see the modules that are covered. There's about 200 hours of video. There's I mean, I could go on and on and on, but really just hop over to the website, and there's a very detailed explanation of what you actually get in the program. And the indicators that we've been using that you've seen on the charts are available from quantumtrading.com. You can buy one, you can buy the bundles, or you can buy the full packages. If you ever buy one or two and then you want to upgrade to a full package, you'll always get a credit for what you have purchased. The advantage of having the full package is that when we develop more indicators, they are automatically added to your package for free. And as you can see here, we will soon be launching TradeStation and also be doing specific webinars with TradeStation, because we are also going to be incorporating into the VPA methodology using order flow. It's something we've been wanting to do for a long time, and that's having TradeStation with the radar screen and also the data that is available on TradeStation will allow us to do that. And we'll probably look at it as well for NinjaTrader. So if you've got any questions on anything we've said, or you want more information, you can email me, anna@annacooling.com, or you can email david@quantumtrading.com. So enjoy the rest of the trading day, enjoy the rest of the trading week. We are back not next Tuesday morning, we're back Wednesday morning. We've just shifted it by a day, and then we are back here on Thursday as usual for this session. So as I said, have a great trading day. Enjoy the weekend wherever you are in the world, or if you're in lockdown or not in lockdown, you know, whatever it is, I hope you have a great weekend. Take care.